Good morning. It's Stephen Taff here this morning. It's Wednesday, the 14th of September, and it's Talking Bull. Welcome to our stream. Apologies about yesterday. We had a bit of a mix-up yesterday, and we ended up on our other channel. But we're going to dive into the news headlines as we normally do, and then dive into the technical analysis. Take a look at the markets. And plenty going on yesterday, and mainly stemming from the big headline about the US core inflation data. So the inflation data dominated markets. Consumer prices increased 0.1% for August, compared with expectations of a 0.1% decline, with a decline in the year-on-year inflation held to 8.3 from 8.5 and above consensus of 8.1%. Food prices increased by 0.8% on the month to give an annual increase of 11.4%. Energy prices declined 5%. Sounds like good news on the month, but the annual increase is 23.8% on fuel prices, energy prices rather. Underlying prices increased 0.6% on the month and well above market expectations of a 0.3% increase, with year-on-year increasing to 6.3 from 5.9. There were significant increases for shelter and medical care services for the month, with broad-based increases, so inflation biting really hard in the States. The increase in core inflation will be a particular concern for the Federal Reserve, especially with evidence that price increases were widespread for the month. Fed fund futures dipped after the release, with market fully pricing in an increase in interest rates of 75 basis points, 0.75%. At the next week's policy meeting. There was also some significant speculation that the Fed would go for a full basis point hike, a full 1% hike next week. Inflation data shifted in Fed's expectations, and higher yields triggered a slump in risk appetite following the inflation data. US equities posted very, very sharp losses along with other asset classes, with the NASDAQ index sliding by over 5%. 5%, I think, is around about where there is a daily limit as well. So we could start seeing things like that. Combination of high yields and more aggressive Fed pricing triggered strong dollar gains, with the US currency also boosted by defensive demand as risk appetite collapsed. The dollar index posted the sharpest daily advance since March 2020. We all know what that was about. Japanese Finance Minister Suzuki stepped up verbal intervention against the yen slide, with warnings that the recent forex move has been one-sided and contained an element of speculation. US dollar yen again dipped sharply from highs fractionally below the 145 level. The German ZEW Economic Sentiment Index declined to 61.9 for September from 55.3 the previous month, which was slightly weaker than consensus forecast and a fresh record low for the index, while there was a steeper decline in the current conditions component. The latest UK inflation data recorded a monthly increase in prices of 0.5%, with the year-on-year increase edging lower to 9.9% from 10.1 and below consensus forecast of 10.2. So is that good news? I don't know. It's still a fractionally good news. The underlying rate edged higher to 6.3% from 6.2. So that's the news headlines. They're all out the way. We're going to dive straight into the charts, and we're going to take a look at cryptocurrency and what a day that was. That was a ride and a half. Really feels like now, Taff, that the crypto, the Bitcoin especially, is more of an index rather than
it's a risk
asset.
asset. It's a risk asset, man. It's just part of the bunch.
Yeah. We saw it all yesterday. We had decent results in the US indices yesterday, capturing gains in all of them on our intraday trade ideas. That was we're really happy about that. But this candle here on a daily basis looks horrendous. Bearish outside candle, but the size of it compared to the previous 3 days, completely engulfing that and almost taking out the decent rally we had on the 9th of September. And that's looking pretty poor. But back below the 20,700 was support level, previously resistance, and will became support and now turns back into resistance again. Slightly off to a sort of like a positive start this morning, trading at 20,300, but really focusing on that 19,875 level, which was the low from yesterday. A breakdown below there, and we could see the market continue to post losses. Looks a bit like a bearish flag formation forming here. Give you a quick indication of what we're seeing here. That's a bearish flag. The potential measured move target for that would be taking the pole and extending it down from the high there. So that would take us right down to 17,600, almost as though that was the 18th of June swing low, almost as though it's technical analysis works. Weird, isn't it? Now, Taf, we're going to take a look at commodities. If you want to share your screen, definitely some interesting moves.
Yeah.
Yesterday.
So this was all right. So I'll start off with gold. Okay, I'll leave the weekly and the monthly, and I'll just go to the daily. So gold obviously went down. I think if you were listening to the headlines, let me just digress a bit. If you're listening to the headlines, the inflation figures were the inflation, the CPI itself was okay, was pretty much as it was the market expected. But the core CPI, which is you remove the energy and the food prices from the inflation, that was higher than expected. So essentially, what does that mean? If you remove food and energy prices from the inflation and it's still going higher, essentially it means that inflation is pretty much still around longer than we expect. So the Fed is going to hike. If the Fed hikes, the dollar is going to spike. If the dollar spikes, this is what happens to gold. So you can see this really bearish, nasty looking candle that happened here. So we're still in a downtrend anyway. So on an intraday basis, I'm just gonna come down here and let me remove my Ichimoku lines here. On an intraday basis, okay. So we've got this bearish flag forming here. It hasn't been confirmed yet. I think it'll only be confirmed if we break the channel here. But what I'm looking to do on an intraday basis today is I'm bearish because the dollar keeps going higher. I'm bearish gold, so I'm looking to probably fade on the first resistance on around 1712. If price manages to just pierce through that, then I'm looking at 1720. I'm not anticipating price to go to yesterday's highs, but if it does, then it'll still be good because I'll shorted that trend line, which is also yesterday's high. So yeah, I'm looking at just selling all the rallies that we have today inside this channel bearish flag formation. And if we break out, then our first support is going to be 1690, and then we've got 1680 as well as support. But like Steve said, the okay, so now for the bearish flag itself, you'll be looking at taking this high, this 1808 high, right up to where it starts, and then taking this again, just making a measured move. But that's still a long way. I'm just looking at an intraday basis, so I'm looking to short all the rallies that I see here. That's for gold, and then we go to oil. Oil played pretty much according to script from my analysis yesterday. So if you remember, I talked about this baseline resistance at 1843, saying that this is essentially your 50% fib retracement for this move from, okay, let me just put it in. It's okay, so that you really understand where I'm coming from. Okay, cool. There you go.
Was it from 89.43? Is it, Taf?
No, it's actually from 97.75. Like this,
okay,
this
then
bearish drive, this bearish drive that we had here from, I think it was the 30th of August, yeah. So that's the baseline resistance. So look, price yesterday made this. It looks like a hanging man, but more like a dodgy. But whatever it is, we know that it's signifying retardation of price. It's not. It's slowing down. Price is slowing down. So on an intraday basis, what does that mean? If you remember yesterday, we talked about inverse bullish head and shoulders forming here. So in the context, that's why confluence really has to come into place. In the context of what's happening with the dollar, what's happening on the daily, then I really don't see this bullish inverse head and shoulders taking shape. Rather, what I want to see is I want to see probably a thrust to the first resistance here and then going down. I'm shorting oil, so but you can see the bears are already in here now, and they're taking this thing down. So I expect oil to be down today, probably targeting 84 as a zone for today, but preferably as a trade, I want to see probably a thrust. I want to see bids come up, take the price higher, and then take it down again. My first resistance here is 89.43. This is yesterday's high. We might not get there, but we could probably play around here. This 87.90 area here. If price comes up here, then I will short it to target probably the second resistance at 84. So yeah, so I'm bearish gold, I'm bearish oil again on the backdrop of a strong dollar and well, potential Fed hike that will be coming up. Over to you, Steve.
Yeah, lovely. Thanks, Taff. I'm going to take a look at the dollar index now. There's something going on with the daily chart. Don't
Yeah,
quite know what
it's
that
got
is.
it's got a huge print there. That's not
Yeah, I don't think
Mm,
that happened yesterday. It's got a print in it yesterday from,
mm,
let's see if we can get a different chart up here. Oh, a few of them have got it by the looks of things.
mm.
Let's see what this one looks like. Yeah,
Yeah,
it's got. I don't know what's
still
gone
there.
on there. Yeah,
Yeah.
bad print on the daily chart. So we can't really
Mm,
really give you a good view on that. So we'll break it down to take a look at the weekly chart first. I'll go back to the ones I've got my things on. So we thought a shooting star possibly formed last week, but although we made a low of 107.72, the turnaround Tuesday, were back up, really pressing higher. So this bullish channel continues to outperform, and maybe we really do need to consider this longer term play of the double bottom formation, which had the neckline at 103. That's extended nicely higher, and the measured move target for that is a move up to the 120 level, which is not really beyond the realms of possibility, especially with talk of the Fed moving interest rates by 1% next week, and that's not necessarily where they will stop. So we've got to consider that dollar strength remains here to stay. Now that provided a bit of a turnaround for the markets on the in terms of euro dollar and cable and anything else priced against the dollar. And we saw well, today we've seen a shooting star. Let me just get that. That's the weekly chart, isn't it? Yeah, get the daily chart up. Nice bearish engulfing candle on the day yesterday. Today we've had a little bit of reprieve, a little bit of breather before potentially another move down. This isn't going to go away anytime soon. So we're looking at 99.57 as this morning's low. We take out that, really opens up potentially an assault on the 98.65 to 98.75 area. That's the euro dollar. Don't expect it really to have any chance of cracking upwards towards yesterday's highs. We stalled just in front of the previous day's highs. So very bearish candle for euro dollar. Cable, very similar, actually more aggressive because it's a bearish outside candle. It's a completely engulfed yesterday's body. And we've also created a new high and finished on the lows. And we've had the same sort of relief rally this morning, but I don't expect that to last long. Really, the eye is focusing on 114.82. The low below that is around about the 114 level. That's pretty significant. if we look on a weekly basis, it's a long time since we've seen levels like that. We're even going back to 1985. You probably don't remember that year, Taff. You probably weren't born then, were you?
That's exactly when I was born.
There you go. So we're back down to the same level. So if you'd have bought sterling dollar back then, Taff, you'd still it'd still be worth the same.
Imagine 37 years.
Yeah, maybe if you
Yeah.
compounded the interest and things like that, it might be a bit
Yeah.
different. But that's resulted in dollar yen obviously pushing higher as well. We're up to 145. So that's a bit of a psychological level. We've pulled back off the highs temporarily. Expect to drive back higher. Taking a look at dollar yen again, going back to 1998 is the last time we saw these sort of levels. So you know, 24 years ago. So yeah, we've I think we were quite bearish on the gun to head yesterday, and that's turned out to be the wrong thing
dramatically stopped out.
Yeah.
Yeah.
Let's get rid of this. So basically, potential here for me on the dollar yen. One thing that really stands out is the potential for two things. Let's go through them one by one. So, okay, we've got the potential for a double top formation, but remember, we're talking about dollar strength. So I would say this is less likely. We'd really need to get a break below 141.50 for that to play out. And on the opposite side of that, we've got almost the opposite to, we're looking at this sort of within trend double bottom formation. So the trend is up. Ideally, you want to see this at the bottom of a trend, but it's like almost like a continuation pattern that's lining up. And we're looking at the high there, 145, a break of there, and could quite easily produce a measured move out of this trade idea. Let's see if we can get that to go in here. It's not really working. No, but it would be 141.50 to 145 is $3.50.
Steve? Steve seems to have okay. I think Steve just his network just popped out. But anyway, so what I'm going to do is I'm going to do my gun to the hidden trade while we wait for Steve to come back. So okay, fine. So I'm going to I'll play crude oil. The move is already on its way. It's going down. Ideally, I would want a bounce from here up to 87.90, but it's a gun to the head, so I have to just take it as it is. So I'm going to just short the move that we have now at I'm going to short crude oil at 86.24, and then put my stop. My stop is really high at 88.29, and then to make a 2-to-1 trade, I have to move my target to, let's say, I'll move my target to 81.40. Yeah. So all right, that's Steve right there, just sending me chat. So that's my gun to the head. I'm just gonna sell that market crude oil at 86.24. Stop is at 88.29, and my target is 81.37. That should do it. That first support there is clearly going to be broken. So yeah, that's my gun to the head. So
Oh,
he's back.
I'm back.
He's back.
You've done your gun to head already, Tap.
Yeah, I've done my gun to the head.
You've jumped the gun.
Yeah, I've just
Yeah, let's.
yeah.
Well, I'll try and see if I can share. I don't know what happened there. But it just
Mm,
seemed like I lost connection completely to TradingView.
mm.
But anyway,
So
let me
it's
see.
not the internet, right?
No, because I was able to do anything else on the internet. So anyway, just finishing
Okay,
off
cool.
with this potential for a double. I think that the sort of the powers that be are trying to stop us giving you all this great information. Potential for a move up to 148.50 on that dollar yen. So yeah, let's see what happens there. Quickly run through indices as we've had a little bit of a blip there, and just have a little look at what happened yesterday. Bearish outside candle on the Nasdaq, almost taking out the full 4 days of positive price actions from the 7th, stalling a little bit. I don't know whether that hit limit down yesterday, but if we think about where that has come from, this channel higher we had, the reverse trend line we talked about resistance being around about that 12,950 level. 12,975 level, sorry, and it stalled just in front of there and reversed so sharply. So further downside expected. If we manage to break support 11,930, then it really is under pressure, and it opens up big sort of like moves to the downside. On the Dow, we're seeing the same sort of price action. We're looking at the 31,000 level, and a break there would open up the downside. Next level of support is almost 900 points lower on that. And the S&P, 3,885 is the support level to watch. Again, took out nearly all 4 days of positive price action that we've seen. So a real reversal on the US indices. Bearish outside day also in DAX. That looks pretty negative. 13,050 is support. We've seen a high today of 13,200. So we've had some decent volatility in DAX, but really the downside is pretty frightening. And even looking at CAC, similar sort of price action, 61.85 there. So yeah, that's not looking great at all on the indices.
No,
We've
not
covered
at all.
the commodities, we've covered the FX, and yeah, I suppose Taff has done his gun to head trade idea. Just leaves me to sort of like try and come up with one, and I can't help but feel it's going to be either selling the indices,
All
or
the
maybe
commodities.
yeah, or the commodities. I feel a bit of a fool, maybe sort of like looking at gold, fool's gold or whatever it is. So that's sort of like played into that quite nicely. But yeah, it looks like bearish flag on there. Potentially oil. We looked at this at the start of the week. I fancied a little bit of move
That's the one
higher.
that I did.
Yeah, that's played out really nicely. And you've just gone short of this, have you, Taff?
Yeah, I've just gone
Yeah,
short of
nice
that
one.
market. Yeah.
Yeah, none of it looks really too clever at all. But I suppose I've got to try and get something out of these indices. The dollar yen we've talked about. Okay, dollar yen. Are we going to get this follow through? I think we will. Now, if we look at the 1 hour chart on dollar yen, here we go. We saw this big rally yesterday. We stalled on at the 50% retracement of this candle yesterday, almost a Marabuzo-like candle, and we've posted a bullish hammer now as well. So that's pretty positive. So I'm going to go for a little long in dollar yen. The risk reward on this is pretty decent. I can put it below the 50% fib retracement level, which comes in at, oh, where have I gone? 143.25, not 142.25. And so that's given us, say, 330 tick stop on there. Nice. I can even go for maybe a little bit more aggressive, maybe even a 4-to-1 risk reward. Why not? And I'm looking at dollar yen really reacting on this rally and posting a nice little winner chicken dinner for today, getting back up to those highs. That's what I'm looking at for dollar yen. So that'll be my gun to head.
It looks good.
Just to finish off, I haven't got the the spreadsheet or the Excel sheet shared. But day ahead today, we're looking at US producers prices at 1:30. Overnight, we're looking at the Australian employment report at 2:30, and key events for the rest of the week: US retail sales, September the 15th, and next week, Bank of England monetary policy decision.
That's a big one.
Yep, that will be a big one. So thanks for joining us today. Apologies for the minor interruption, but we'll hopefully be back on track tomorrow. So take care and look forward to seeing you soon.
Cheers, everyone.